Start one here.
Not yet. I might just start. I might start in July. Just start fresh month.
I think this would be a good week because the unemployment data is coming out. Because if you notice from June, we had our biggest win during you start one here. Yeah, we had our biggest win during NFP of June of this month. So I'm expecting like probably some big wins coming. If not this week, next week for sure. Hey John, how's it going? Let's see. We got a couple more people coming in, so I'm gonna give it a little more time. But yeah, if you guys have any questions, feel free to put them in the Q&A, and then I can get through them. After I look over stuff. Otherwise, I'm probably gonna be going over the new K2 pivot strategy. I already have it set up right here. A lot of people have been asking for me to go over it a little more in detail. I've been working on the training videos, and I just finished them today actually. So I'm gonna be finalizing them and putting them together to be uploaded probably by the end of tonight, if not tomorrow. Then you guys can start applying them pretty much on your own. What were you saying, Aaron? Sorry, cut you off.
Yeah, I was trying to figure out which account should I get for the funded account. The 50K.
Might as well go big. Personally, I think you might as well go big because it's not gonna make a difference. The only difference is gonna be your account at the end, because pretty much you're going to be trading the same way, regardless whether it's a 50K account or a 100K account. You're just going to be trading, bigger lot sizes if you have a bigger account.
Yeah, I'll think about it.
All right, cool. So we have one question from an anonymous attendee asking about S&P. So let's pull up S&P real quick. I think Wade called S&P call earlier, no? All right, cool.
Was it a buy or sell?
Let's see. I'll pull it up real quick. Let's see. Looks like it's a buy, I think. Yeah. He had a buy for, actually, when did he call this? Yeah, he called it today, actually. So a lot of people are in a buy for S&P.
Where's the buy price at?
The buy price was at I think 30. Here, let me just put it up over here. So it was at 30.66, 30.66, and then the stop loss was at.
So he's in profit right now.
Looks like it.
Yes, sir.
8, 15. Oh, you guys got on this way earlier, or I don't know if this was a. I'm not sure if this was an old call or actually no, this was from yesterday. Okay, so we had this from yesterday. It looks like it almost hit full TP. It was yesterday at 4 p.m., but he shared it again today at 4:08, so about a little less than an hour ago. But it is above the K2 pivots right here. Let me look at the K2SR. Let's draw some zones. Okay, so let me take this off real quick, and I'll take this off too. Let's draw some zones real quick. So we got a zone right here. Yeah, this is actually really good because there's a zone right at the entry. So if price even was to come down right there, it would still reject off that zone pretty nicely. Let's see. So we'll draw this right here. Yeah, if you guys aren't familiar with the K2SR indicator, I know there's a couple of people here that aren't subscribed to the strategy. Pretty much what the K2SR does is it identifies areas where price is rejected from in the past. You can see right here, price rejected right here, rejected right here, and rejected right here. So it created a zone. So we know exactly where price is likely to reject in the future. Right here, you can see price rejected right here, rejected right here, 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 and here. So this is a strong support zone right here. So if you guys have access to the K2SR, you take it off the chart like that. Chart looks perfect. You know exactly where price is rejecting from. Let me get this lower zone right here too, just for visualization purposes. There's actually a big zone right here. So I'll draw this zone down here because I don't think price is going to come that far. So even if price came down below entry, you still have a very strong support zone right here. So I'm pretty sure Wade uses a K2SR to identify his entry because it looks perfect. So yeah, you can see right there, there's a strong area right here. So if you guys are still in this trade, it looks like it almost hit full TP. So we'll throw in the momentum indicator. Obviously, it's in a strong buy momentum right here. You know, the entry was right here and it shot straight up. This would have been a great entry if we entered a K2SR entry right here. Just a little bit above Wade's entry, 400 pips right there. But if we take off the momentum indicator and we just add on the pivots, it looks pretty good because price is breaking above the above all the pivots. So it's broken above the pivots, and then as soon as this green level 1 and level 2 pivots cross the red one, which is level 4, it'll provide for a strong swing up. So let me see if there's a there used to be a tool here where we could draw like a curve. Do you know where that is, Aaron? Oh, right here, curve. Okay, so right here, if this swings up like that, you can see price. Let me make this a little brighter. Oh, we'll just keep it at blue. Well, I'll make it dotted. Perfect. Yeah. So if this swings up like this, you know, this gives prime movement for S&P to shoot on up. So this looks like a very good trade. You know, it was a great call by Wade. I should have taken this trade too. I didn't even look at it, but it looks like it could play out perfectly. So if this crosses upwards and, you know, has a strong move up, you can see it continue on up to this next zone up here. So if you guys are in this buy, I mean, this is a great entry. I'm thinking about hopping in right now, but the problem is it might come down right here and retest the pivots before shooting on up. So I'm gonna keep watching this myself. I might take this a little later, but it does look like, you know, it's a great setup that we have right now. I'm just gonna move this over to, it looks like the entry happened probably over here. So you guys have been in this trade for some time. If you guys took this yesterday, let's see what the number is again, 3066. But yeah, it looks great. Pretty much, you know, what we're looking for here is we're looking for price to break upwards like this. So you can see this setup right here. You can see the green and the yellow cross the lower 2 pivots right here. We're looking for that right here too. You can see the green and the yellow are moving its way up. So if it crosses above the red and the orange, like it did right here, you can see a strong movement up to the zone right here where it, you know, it hit some resistance, broke through, consolidated a little bit before shooting on up. Similar right here with the sell right here. So you can see the sell happen right here. And then once the green and the yellow cross the orange and red, you know, price shot down pretty nice. Right here, it hit some resistance, so obviously it didn't go that far, but it's been testing it. It tested at 1, 2, 3. It had an issue breaking, so it looks like it's going up for another test. But yeah, if you guys have access to the K2 pivots indicator, this is the new indicator that I released last week, or I don't know if it was earlier this week. But yeah, this indicator helps a lot with determining, you know, breakouts, because you can see right here, once price crossed the pivots and then they spread out like they did right here, strong move upwards. You know, if you enter this trade somewhere right here, so we can line up the trend starting from right here, and you rode this all the way up. It's about like 2,600 pips on S&P. You know, I don't even trade S&P, but you can see here that it obviously works very well. But yeah, that's S&P for right now. Looks great. You know, I'd probably hang on, or, you know, I'd probably take profit here if you wanted to, and then wait for it to retrace a little bit. It looks like it's retracing, and then I'd probably make another reentry once you know, it spreads out again. Because the thing is, the zone, so this area for where it currently is to the next zone is about 580 pips or 550 pips. So you have a lot of cushion there to make some profit, you know, depending on how you want to trade this. You could even go in the lower time frames. So on the 30-minute. I think Wade trades on the 30-minute and 1 hour. So let's see. Oh, it looks perfect here. So it's actually testing the pivot right here, and it might reject right off and shoot on up. Actually, it might not even push that far down. You can see that nice bottom wick right there. You can see right here, price broke above right here. So this is if you're trading intraday. I was looking at the 4 hour previously, but this is the 30-minute. So if you're trading intraday, the setup already started right here. You can see the the pivot's already spread out. And as it spread out, it shot up way from down here. So it started to spread out on this candle. So it shot straight from right there, and it pushed up about 560 pips, close to 600. And right here, it might just reject off this K2 pivot and then shoot on up. So, you know, depending on what time frame you're trading on, it still looks like a great buy right now. Let's see, we have one more question from Lester. So Lester's asking, if I'm free on TradingView, K2 indicators are okay with that, even if it's 3 indicators and you. Lester, so let me see what the, I'm not sure how many indicators you could have on the chart at once, but you know, depending on what strategy you're using, if you're only using, well, I mean, it wouldn't even matter, because if you're using the pivot strategy, you only need 2 indicators. So you'll have the momentum indicator and the pivots indicator. That's only 2 indicators. If you're using, you know, the intraday strategy, that's only 2 indicators as well. It's the K2 trend meter and the momentum indicator. So I think you should be fine on the free account. The only problem is that you can only have a few alerts. So depending on how you trade, let's see, try to figure out. I'm gonna bring this over here real quick. So depending on how you trade, you know, if you want a lot of alerts, you're gonna need to upgrade your account. But otherwise, you can use the free account to trade on, because you can just swap out the indicators. Like for the K2SR, you can draw the zones and then take the indicator off. You don't have to keep it on the whole time, unless you really want to. But let me I'm gonna look at the free account and I'm gonna see what's available on there. I don't think it's very much. It's mostly if you want to use, you know, the rewind function and you know, custom timeframes. Let me see. Okay, perfect. So I got it open right here. Let's put this over here. All right, cool. So if you're on the basic, you can only have one chart up. That's fine. You can replay, but it's only on daily, weekly, monthly. So obviously, if you want to back test, you know, you'd have to upgrade to at least a pro or something. It gives you all time frames. Let's see. Historical data looks the same for you can only go up 5 years. So I mean, I don't think you're gonna go that far. So you should be fine on that. Let's see what else. Yeah, like right here, you can have 3 indicators at a time. So you should be fine with the free account. It just really depends on if you want to put a lot of alerts on. This is the main difference. So the main difference is going to be the replay function if you want to backtest, and the other thing is going to be the alerts. So you can only have 1 alert on basic. You know, if you have a pro, you can put 10 alerts, pro plus 30 alerts. I have premium, so I could put 400 alerts. But that's pretty much it. Also, it's just the custom timeframes. So let me see if they have timeframes here. I think you could only have certain timeframes up. So yeah, I don't know if you can use custom timeframes. You'd have to check. I don't have basic, so I can't really check. But I think if you want custom timeframes like the 10-minute, you might need to upgrade your account. I don't see it anywhere on here, so I might be wrong. Okay, so Lester said I don't have 10 minutes. Have you tried? So if you click on your chart, Lester, just click on your chart and then type in 10, and then you can change it to the 10-minute. I'm just not sure if that works on basic. I know a lot of people don't know that trick. Like they don't know they can click on here and then you can type in any time frame you want, 25-minute, 30-minute, 40-minute. It's really up to you. But I don't know if that's available on the basic. Yeah, it doesn't really say here, so I can't answer that question. But otherwise, I think the main issue is probably just going to be your rewind function and your alerts. But yeah, S&P looks great. Looks like it's rejecting off this point, off the K2 pivot. So if it closes like that, we have about 21 minutes left on this candle though. So I don't want to jump the gun and say it's going to shoot up, because it could keep pushing down and test, the other pivots. So it's really going to be up to this candle, after this candle closed right here. So I'd probably just give it some time, but if you're still in that buy, I think you should be perfectly fine. Let me go back to the 4 hour. Let's see, okay, so I've answered those questions. One more question from an anonymous attendee. He's asking about odd CHF. So we had that odd CHF open from last night. Let's see. So odd CHF still looks good, actually. We still have this one active too from the 22nd. So I think that was last week. So we've had this trade open for a while. But we did call a second one that was last night. So you can see right here, let's take out the pivots real quick. You can see right here, it's pretty much just ranging between the zones, going up, going down, going up, going down, going up, going down. And then it looks like it, you know, from right here, it's going to go back up. And then we have TP1 right here. So, you know, if it does shoot up right there, you know, it's tested this area already in the past 1, 2, 3, 4, 5, 6, you know, 7 times. I'm anticipating it to shoot on back up from right here to at least this zone to hit TP1. You know, last night it was a weird drop. Like I thought this was pretty weird because it was a perfect entry if we add the pivots on it. So it's still in an uptrend right now. You can see right here, this is similar to what we were looking at on the on S&P. So if this closes like another bullish candle and this green yellow pivot cross above the lower pivots, you know, we can anticipate a movement upwards. So you can see right here, we can anticipate this type of movement going upwards. So if you guys are still in this trade, you know, I saw a lot of people going crazy last night. You know, obviously I would have freaked out too if I was awake and I saw, you know, this huge drop, because this is an unusual drop. But it looks like it's recovering. You know, it rejected off the pivots right here. If this closes as a strong bullish candle, like one of these, you know, I can see it shooting up pretty nicely. So if you guys are still in this trade, I think you guys are fine. You guys, you know, just hang on to it, because you can see right here, I'll show you another example from when that happened. So right here, it failed to cross. You can see the green and the yellow didn't cross, so it didn't make its way upwards. Right here, you can see it crossed it, but it was at, so this candle right here crossed it, but it was at resistance already. So that's why it came back down. Right here, we have a lot of open space. So once it crosses right here, we can see it shoot on up. And the thing is, it's tested the zone. Let's see. Yeah, from the bottom, 1, 2, 3. That'd be a quadruple test. And if you zoom out on the longer time frame, it's clearly in an uptrend. So you can see it was an uptrend, retracement, consolidation down here, and it looks like it could correct back up to an uptrend to continue the trend upwards. And that's why I took this trade. You know, you can see right here, it's in heavy consolidation. You know, you can't deny that it's in heavy consolidation right here. But it's having trouble crossing the lower end right here. You can see the lower end for the support. It's tested it. See, it came down 1, 2, 3, 4. It was already a quadruple test down here 4 times. So I'm anticipating it to shoot on upwards. So if you guys still have this open, I think it's perfectly fine. I don't know if you guys closed it out because you guys got scared. But you know, overall, it's clearly in an uptrend overall. So you can see right here, it's been in an uptrend since March 18th of this year, and it's just in some consolidation right here. So I wouldn't worry too much. Let's go on the higher time frame. 8 hour, it's still in an uptrend on the 8 hour. See the daily. Yeah, the daily is even on a stronger uptrend. And on the daily, it's rejecting directly off the pivot. So it's already above the pivots right here. It's rejecting right off it. So if this closes bullish for the day, you know, I anticipate it to keep shooting on upwards. So that looks good for the most part. But yeah, that's odd CHF. Looks great. I think you just have to give it some more time, especially for, you know, the specific pair. It just moves really slow, especially with, you know, now that we're in summer and it's just, you know, everything is just all over the place, especially with, you know, all the COVID news that are coming out. Actually, let me check if there's any new news. I don't think there's any news tonight, so I think we're good to go. Let's see. All right, so we're looking at the news for today. We're pretty much done for the day with news. The next news is going to be at 4 a.m. So we're probably not going to call, a late position tonight, or we'll call a position like at 10. We're not going to call a 2 a.m. position because there is GBP news at 4 a.m. Also, high impact U.S. news right here. We have non-farm employment change. So basically, the employment data tomorrow at 5:15 a.m. And then 7 a.m. we have PMI, and then another the FOMC meeting minutes are just going to be a reiteration of today's testimony. So I don't think that'll be too much of an issue. So we'll be taking our US 30 tomorrow. Otherwise, I think that's about it. I don't see anything else really in the way. The trade balance, this is going to affect the market, so we're not going to trade during this time. But other than that, I think everything looks pretty much fine for the most part. Let's see, I have CNBC open. Let's see if there's any news right now. I don't see anything really pressing right now. It's just a lot of crazy coronavirus news. Like, let's see. So we got some Texas news right here. Obviously all over the world, it's just coronavirus is just going crazy. It's just shocking, how bad it's getting. I don't know if you guys saw the other news, but it showed that, what did he say earlier? So Fauci mentioned that he's anticipating like 100K new. Oh, here we go now. So yeah, I don't really care about the corona news. It's bad news regardless. But there was news with Dr. Fauci about. See, he was saying here that the coronavirus outbreak is going to be very disturbing, could top 100,000 cases a day. So this is going to affect the market like crazy. So this is why the market's moving really weird. First, because it's summer. Generally, the market moves slow during the summer because the market makers and the big players go on vacation. But the coronavirus, this brings a lot more craziness to the market. So yeah, whenever we get coronavirus news, it's best to stay out the market. Otherwise, it just might get a little messy. So we have one question from Nazar. He's asking, can you explain how you get TP1 or TP? Can you explain how you get TP1 or TP1 on US 30 when you get TP1 and when TP? Okay, so Nazar just wants to see how do we get TP for US 30. TP1 is basically set, 50% of profit. So if I go here, if you guys took the daily US 30 entry today, so let me just close this. Yeah, if you guys are familiar with the daily US 30 entry, pretty much the way that it's entered is, so we start at the open of the New York Stock Exchange right here. So the New York Stock Exchange opens at 6:30. So this is when the market opens. This is just quick explanation for those of you that don't know the K2 strategy. I'll just rewind over here. So pretty much the K2 daily entry is very simple. So this is the daily K2 US 30 entry. For one, you want to look for entries after the New York Stock Exchange open, which is 6:30 a.m. Nazar said, I mean, explain TP1 and TP2. Yeah, I'm going to get to that. Let me just show the strategy for the people here that don't understand it. I'm going to go over it regardless because I'm going to have to get to that point. So first, you're going to look for entries after New York Stock Exchange at 6:30 a.m. Next, you're going to take the first valid K2 momentum signal. And pretty much that's about it. It's just two requirements: enter on open of following candle. So if you guys aren't familiar with K2 indicators, basically what these vertical lines do is they indicate the direction of momentum. So pretty much if you get a red signal, that's a sell signal, and it's valid if it's a red bearish candle. So if you see that, you know, obviously it pushes down. Right here is a valid buy. You get a green buy signal with a green bullish candle. So you can see price went on up. There's other ways to apply it. You have to apply this with other indicators, but for this specific strategy, this is the only indicator that we use. And the reason why we trade after 6:30 is because this is when the New York Stock Exchange opens. NYSE stands for New York Stock Exchange. Obviously, you want to trade when there's high volatility in the market. So you get in and out of the market, and you know the market's actually moving, and you're not getting trapped in any positions that are pretty much stale. So first, we look for entries after the New York Stock Exchange opens at 6:30 a.m. That's this time right here, Pacific Daylight Savings Time. Next, you take the first valid K2 momentum signal. That's about it, 2 requirements. So right here, the New York Stock Exchange open. Right here, we got a momentum signal upwards. So this is signaling that price is going to go upwards for the rest of the day because, you know, obviously you want to go with the direction of momentum. If you're familiar with the stock exchange and how stocks move, obviously they move with momentum. You know, if the big players are putting buy positions, you're going to want to follow where the big players are going. You're not going to want to go against them. And that's why I only trade during this time. Like this is during Euro session. You know, obviously there's a lot of volatility right here too. I know there's some people that trade it during Euro session. So if you took this entry here, so let's see, midnight was right here. This is when the European stock market opened right here. So same situation. You pretty much just wait for the stock market open for, you know, whatever country, and then you take the first entry right here, another winner straight up there. You know, it's really simple. There's a lot of traders in our group that are from, I think, Germany, and they trade the DAX, which is the DAX 30 or the German 30, and they make a killing off that too. And, you know, if I could stay awake 24 hours, I'd probably trade that too. But you know, I focus on the U.S. market since I'm located in the U.S. So yeah, pretty much first requirement's met. We waited for the stock market to open. Next, we wait for the first valid K2 momentum signal, and then we enter on the open of the following candle. So let's enter a buy position right here. We're going to place our stop loss at the previous swing right here. This is a little too tight. It's only 1,112 pips. So if you followed me before, you know that our stop loss is set at a minimum of 1,500 pips. So let's see, Nazar, if you're here, this is how we set it up. So we set our stop loss at the previous swing, which would be, here, let's move this out of the way. We move our stop loss at the previous swing, which would have been right here, correct? But the problem is it's too tight. So we move it down to the minimum of 1,500 pips. The way that I determine full TP is we trade on a 1-to-1 risk to reward ratio. So if we're 1,500 pips in the stop loss, we're also 1,500 pips in profit. So that's how I set up the full move. This is going to be stop loss. This is going to be TP, full TP. So this is going to be TP2 right here. The way that I determine TP1 is I move my TP1 halfway to the 50% mark. So what's half 1,500? It's 750. So this right here is going to be TP1. The thing with TP1, the way that I use it is a lot different from what other people use it. I know some other people, when they trade, they use TP1 as an exit point. For me, that's not how I use it. For K2, we use TP1 as a reminder to move your stop loss and profit. So the thing is, I'm not planning on exiting right here. This is where I'm going to move my stop loss once price reaches that area. So my stop loss is currently down here. But once price crosses this area, I move my stop loss to this point. So I eliminate all risk and I guarantee 750 pips. And then I can go for the full move of 1,500 pips. You know, that's a smart way to do it, because why would you cut yourself short and exit at TP1 when you can move your stop loss here to guarantee this much profit and still go for the full TP? You know, it just doesn't make sense how people exit at TP1 unless you're running multiple positions, which adds on more risk. So I personally don't recommend doing that. I know I've recommended it before, but a lot of people screwed it up. So this is the way that I teach it now. So people don't get confused. There's no way to like mess this up. So let's let this trade run. And then you can see right here, price shot up. And then price shot up to right here, right? So once it reached TP1, we moved our stop loss to over here. So now I'm just gonna write stop loss. So our stop loss is here now. We've already guaranteed 750 pips. So if price comes down, we get out at a win. If price goes up to full TP, we get full TP. You know, it's a win-win situation right there. There's no risk involved. You don't have to stress anymore. You pretty much guarantee a win. So if we let this run, you can see right there, price shot up. You know, some people, I noticed, even myself, if price shoots up, I move my stop loss even higher, but I do that manually. I just trail it. But the thing is, if you don't want to do that, you just leave your stop loss at TP1. So right here, if price shot down, you would have gone stopped out in profit regardless. So you would have been out of the trade. But if you wanted to keep your trade running, you can see right here, okay, so let's put our stop loss back. So if you're letting your trade run to full TP, which you could have done as well, just for me, you know, I like to exercise proper risk management. I don't like to let my trades run all the way unless I have a multiple trade or like a twin trade running with it. So you can see right here, if you let this trade run, it retraced down here a little bit. I know a lot of people re-entered down here and then you came up, full TP, guys. So it's as easy as that. You know, if you want to take the risk and go for full TP, you could do that. If you want to be conservative and trade safe, you could have got out with half TP. You know, you're still at a win. You know, there's no reason for you to keep your stop loss down here, because obviously if you locked in profit up here and it came back down, you could have re-entered again right here at the same entry. That's what a lot of people do. And then the cool thing about that is you would have gotten 750 pips right here by getting stopped down in profit. And then you would have re-entered down here and then locked in another 1,500 pips. So if you do the math on that, you know, you 1,500 plus 750, you would have locked in 2,250 pips in basically 2 moves. Let's see. So we have another question from Nazar. Does that answer your question? Just want to make sure that you get that before I move on. So we have one more question from Dion. Dion's asking, how much was made on that trade with a 0.01 at full TP? So at 0.01, depending on your broker, Dion, I don't know if you're using Hugo's way, but if you are, that would have been 1,500 pips. I mean, $150, because on Hugo's way, so depending on your broker, so let's see, US 30 pip valuation. So on US 30, I mean on Hugo's way, it's going to be 1.01 equals 10 cents equals 10 cents per pip. But if you're trading on, I think, AvaTrader or something like that, one of the other brokers that a lot of people use, it would be 1.01 would equal $1 per pip. So depending on what broker that you were using, 1,500 pips equals either 150 or 1,500. So it's a huge difference depending on which broker you use. Not all brokers measure them the same. So yeah, unless you have a different broker that values it different. I think IC Markets values it a little different too. But otherwise, you know, that's the simple breakdown for the pip valuation. See, Nazar said, yeah, I got that, but I may ask one more question too later. Yeah, Nazar, if you have any other questions, feel free to put them, you know, in the Q&A. We actually don't have any questions right now. So if you guys have any questions, feel free to put them in the Q&A. You know, I can go over any pair. I can show you any strategy. It's really up to you. The table is yours, guys. Otherwise, I'm just going to go over the K2 pivot strategy. There was a bunch of people that asked me to go over it today, so I'm going to go over it on different time frames just to show you guys how it works. And other than that, I'm just going to look for entries at about, so it's 5:30. So in about 15 minutes, I'm going to start looking for entries for the 6 p.m. 4-hour candle close. So yeah, guys, I think that's about it for right now. So I'm just going to go over the strategy for now then. So let's go back. So I have this set up. Actually, I'm just going to scan the charts real quick to see if there's, you know, if there is even any entries for us to take right now. so I can prepare for the candle close. On CAD, if we get a sell signal, Aaron, are you here?
Yes, sir.
Do you see any trades? So I know what to look for.
Not really. I'll scan the charts again.
All right, cool. I'm just gonna take a look real quick so we have, a good visualization as to what could come. I think odd CAD would be good if we had a sell signal.
Yeah,
Actually,
I think so too.
yeah, I mean it's been consolidating with like the rest of the odd pairs, so.
I mean, it can still drop even if it doesn't give off a sell signal. It can still drop.
Yeah, I think so too. I think I want to go up though because we still have odd CH. What? That's the problem. We have odd CHF for a buy,
Yeah.
odd USD for a sell. But odd USD already hit TP1, so I'm actually out of this trade already, guys. If you guys are still in this trade, I mean it's still active, but I got out already at TP1 right here.
Excuse me.
So if you guys aren't familiar, I mean, yeah, it's the same exact strategy that I mentioned earlier for US 30. The exit strategy is once it reaches TP1, I move my stop loss to TP1, and then if I get stopped out in profit, then I get stopped out in profit. So I'm technically not in this trade anymore, but it's still active if you guys didn't get out of it. But if you follow that strategy where you got out at TP1, you wouldn't be stuck in this trade right now. So that's why I always recommend to follow the exit that I pretty much explain most of the time. Zara said, well, if I get TP1 all the time and don't get to re-enter or get a chance to get full TP, so I can lose more when I lose and get less on wins. So how can I avoid that and even out? It evens out in the end because we have more wins than losses. Our win percentage is like about 80%. So technically, you're not going to be in the low. The only reason that she'll be lower is if you don't use proper risk management. See, here's the thing with a lot of people. A lot of people think that the pips count, but it's not the pips that count. It's the wins that count. Because see, look, if I enter this, I'm just gonna enter paper trading here. Okay, look. So on this account right here, this is a big misconception. I spoke about this with a couple of people today, and they were confused why people were tripping about trades because the thing is they're not using proper risk management. So look, check this out. If we're entering a trade for 150 pips, right? And I tell you guys to risk 3% every single time. So 3%, our risk for this trade would be $300, right? So if you won this trade, you make 300. If you lost the trade, you make 300. Look at the difference. We have 100 pip stop loss, 100 pip take profit. If I change that to 50 pips, the profit's the same thing. It's still $300. A lot of people screw this up because they go and put in crazy lot sizes. They don't go by risk. So if you're using proper risk management and you're trading 3% every single time, it's impossible for you to blow your account or make less money because we have more wins than losses. So let me go to let me show you the results. So the results for the year, let's see. Okay, so results for the year, we have 300 wins and 94 losses. If each win was, so say each win was $100, right? So 301 times $100, you'd make $30,000 off all these wins if each win was $100. If you had 94 losses, so let me write this down somewhere so I can remember. So this is gonna be, or actually let me just put these stickies right here. So a lot of people don't understand risk management. This is what I mean about using proper risk management every time. So for wins for the year, let's see. So we have 301 wins and 94 losses. So for 300 wins times $100 per win, you would have made $30,100. For 94 losses, if you're trading proper risk management, 3% every single time, so 94 losses times 100 losses times, let's see, what was it, 900 per loss, would equal 9,000 400. So the thing is, if you took all of these trades and use proper risk management like you're supposed to, 30,100 minus 94, you'd still be in profit $20,700. And a lot of people don't know how to do the math on this. So look, here's how I'm going to debunk your argument, because you're saying that if you only take TP1, look, we have 301 wins, right? And okay, so 301 wins, and you get out at TP1, which is half the full profit. Full profit is $100 per win. If you're only getting out at TP1 every single time, and then you multiply that by what, like 50? Yeah, 50 per win. And this is if they're all TP1s. The thing is, we don't always hit TP1. Most of the time we hit full TP. But if you're only hitting TP1, so we'll do 301 times 50, you still would make $15,000 and $15,050 right there. That's your total profit. If you do that and you still subtract the losses, so if you do 15,000 minus the total losses, we still have 94 losses, same difference. If you took TP1 every single time and you subtracted the losses, you'd still be in profit overall, minus, so you'd still be in profit $5,650. I think what a lot of people need to focus on is understanding risk management and understanding how to calculate, your wins and losses. A lot of people don't want to take TP1 because they think they're taking a smaller loss. But the thing is, if you're using 3% every single time, like I mentioned, or if you take even 1%, it's still going to be the same thing. Look, 50 pip take profit, 50 pip stop loss, $100. If I change that to 200 pips, it's the same thing, $100. The problem with a lot of people is they don't use proper risk management. I always tell people to use, risk percentage. The thing is, a lot of people go by units. They want to go like a standard lot, but they never calculate the actual risk. The thing is, if you calculate the risk for every single trade, you're always going to be profitable. The only reason people lose or blow accounts is because they're over leveraging. You're taking like a standard lot on a $1,000 account. You're not supposed to do that. That's how you blow accounts. So if you guys need help with risk management, I can explain it to you. The thing is, nobody wants to listen. Every time I explain proper risk management, it goes in one ear, out the other, and then everyone goes and does whatever they want to do. Because I'm talking to Aaron over here, so Aaron's not profitable. Oh man, look at Aaron.
Shawn, don't start.
I already knew it. But yeah, guys, just going over risk management, because every time I see someone talking about blowing their account, it's literally impossible to blow your account. When I see people in the chat talking about blowing accounts, it drives me insane because it's impossible. Like, look at our wins for June. We're still at 41 wins and 12 losses. People are going insane because they think they're blowing accounts. But how could you blow your account if we're up in wins and we have 12 losses? The problem is a lot of people aren't using proper risk management. So if you guys keep blowing accounts, I think you should focus more on risk management, not on using specific trades. Yeah, David, what's that app that you guys use? I just want to show everyone so people could understand. Or Aaron, you have that account, that app, right? Oh, Stinu. Okay, so let me pull up Stinu real quick. So we got, let's see. Stinu. So if you guys use Stinu, I've never used it myself because I use Forex.com, so I already have it. Yeah, if you have, I mean, they don't even have the thing on here. If you guys download Stinu, you guys can calculate your risk. Every time you trade, you have to use proper risk. You can't just use random lot sizes. Or what you could use too is go to tips.com. And then they have a calculator here too. I know it's a lot of work, and that's the thing. A lot of people don't want to put in the work, and then they get mad when they blow their accounts. But if you'd put in the work and understand risk, you would never blow your account. It's literally impossible, especially if you're taking like my trades, because we have a high win percentage. So it's literally impossible. So stop loss, what are we gonna do? Stop loss is like 150 pips. It tells you your position size. You take a 20,000 position size if you're trading, units, is 0.2, and then it's a $300 risk. If you change that to 50 pips, the same thing. If you guys can see here, the risk is always the same. It doesn't matter how many pips. A lot of people complain that my stop loss is too far. The thing is, it doesn't matter. You have a 250 pip stop loss, it's $300. You have a 500 pip stop loss, it's $300, guys. Like, I don't understand where that argument comes from. 100 pips, $300, guys, the same thing. Let's see. Let's see. James said lawyers can't do math. Yeah, that's 100%. I can't do any math, so I gotta use my calculator. Lewis King said, how do we get the risk calculator? So Lewis, if you're using, you can go on babypips.com, go to tools, use a position size calculator, and then you can type in everything here. If you're trading on TradingView and using, you're trading on TradingView, you can just enter your trade right here. If you're using Forex.com or Rwanda, you can just type it in right here. So say, I think on this account, it's a $10,000 account. So if you wanted to do that, you just type in risk right here. You put in your stop loss, 50 pips. It'll be $300. Put it in 200. Oh shit! Why did I enter this trade? Take this off. Yeah, but yeah, same thing. It doesn't matter whatever you put in. 200 pips. You want to put 500 pips. It's gonna be the same exact thing. You just change the risk. But yeah, I just get like really annoyed when people say they blow their accounts, because it's literally impossible to blow your account. As long as you follow the rules and you do what you're supposed to do, you could literally be profitable just by copying the K2 trades. But let's see, I'm gonna keep looking at the Stinu, ask Siri. E's asking, I'm in a sell position for odd USD. Looked at the weekly set TP. Do you think I have a chance at reaching? So I'm gonna look at this real quick before I go over to, James said, I used to teach poker. I would tell people making good money wasn't about making huge wins. It's about minimizing your risk. Yeah, James is 100% on that. And that's what I always tell people too. If you're able to minimize your risk and eliminate your losses, as long as you keep stacking up these TP1s, even though it's not full TP, you're still going to be in profit, like regardless. It just wouldn't make a huge difference. If you would take TP1 and not take any losses, it's impossible for you to be in the negative. But in order for you to blow your account, that's only if you're over leveraging. So say if you're trading, on this account, you're trading. So like this is a 10,000. Let me go to a normal account. So this is what a normal person would have. Let's see, well, Aaron, what's like a normal account size that everyone has? Like 1,000, right?
Yeah, about 1,000.
Yeah, so 1,000. So I'll change this account to 1,000, right? If you have 1,000, you're supposed to be using a, what's this, a 600. So that's a nano lot. So that's a 0. I think that's even smaller. It's a 0.06. Or not? Am I saying that right here? Oh no, actually, yeah. So 600 is going to be a 0.06 when you trade it with $1,000 account. Some people try to trade, are trading like, what, like a 0.05, so it's like 50,000 units. If you're trading that big of a lot size with a 100 pip stop loss, you're literally leveraging half of your account. That's why I don't understand when people take huge positions on a small account. If you're on a $1,000 account, you have to use proper risk management. You put in 3%. You're only supposed to be trading 0.03. You're not supposed to be trading anything higher than that. A lot of people don't listen, or they don't see the goal in growing your account. They just want to make huge money with a small account, which is possible, but it's also possible that you'll blow your account. So what I always recommend is to, consistently grow your account over time rather than going for that overnight success, because it never ends well. I don't know anyone that's been an overnight success and has been trading long term. They've had like their rush for one day, and then they blow their account, and then they don't trade anymore. Let's see. Dion said 0.06 is supposed to be 60,000 units. No, Dion, I don't think so. So let me oh no, you're right. It is 6,000. No, you're right. 60,000, not 60,000. Yeah. So right here, you can see that a unit size for like a 10,000. So let's do $1,000. Okay, so you're doing $1,000. You want to do a 3% risk for, let's say, like a 50 pip stop loss. See that 6,000 position size would be a 0.06. The problem is a lot of people want to trade with like $100 or like $200. You could trade with 100, $200, but you're gonna blow your account. That you just need to have more money in your account to survive the moves if you're looking for a bigger move. James said buy signal on the US 30 10-minute just now. So let me check that out real quick. Let's go to US 30 10-minute. This would be a nice entry for the K2 pivot strategy. It's gonna be stop loss. Gonna be stop loss is kind of tight though. I don't know if I would take this trade. I mean, it could hit. I don't think it won't hit. I mean, James is making a killing too. I saw his CoinEx earlier. Aaron, did you see James's account?
James, oh yeah. He's been talking to me almost every single day. Well, what's James? Oh yeah, James. Yeah. He's been talking to me every day.
Well, which James are you talking about?
OG James.
Oh, Uncle James?
Yeah, bus driver.
No, not him. Bus driver. Yeah, no, James Ness right here. See, James started with 1,000, and then he flipped it to 3,000, 3,500.
Wait, what's James? Lawyer James?
Yeah, Lawyer James.
All right, call him LJ.
LJ. Yeah, he deposited 1,000 to his CoinEx last Sunday, and then he took US 30, and I think Wade's call, and he made a killing. Like he's more than doubled his account within.
Nice, bro.
I don't know. I'm jealous.
Yeah,
James probably trades better than me now.
Yeah, for real.
Oh man, but yeah, James just called this out right here. This is an entry for the K2SR strategy. So let me see if I can get the requirements right here. I'm showing this chart, but let me I could grab them on this one because I was explaining the strategy to people on here. All right, so I'm just gonna copy this. And then I'll swing it over here. Let's see. All right, cool. I'm getting a lot of messages from people about risk management. But yeah, guys, if you guys follow proper risk management, it's literally impossible for you to blow your account. I mean, you're not going to make a lot of money very quickly. I'll give you that, and that's what a lot of people want. But the thing is, I prefer to be profitable than to get rich on like one trade. So if you want to be a long-term trader, you want to be a full-time trader like I'm doing now, that's something that you for sure have to understand and get down, because that's the only way that you'll succeed in trading long-term. You have to play the game smart and not play off emotion. But yeah, if you look at the K2 scalp strategy here using the K2 pivots, first you want to identify strong trend upwards, which we do right here. Next, you want to identify a retracement and rejection of the K2 pivot. So right here, price came down, retraced, and then rejected off this level 3 pivot right here. Lastly, you want to identify a valid K2 momentum signal. So right here, we have a buy signal. It's a valid buy signal because it's a buy signal with a green bullish candle. So this would fulfill all requirements right there. And then you'd enter on the open of the falling candle, which would be right here. But like I was saying earlier, this is kind of tight right here. So it's a tight entry. The only problem that I also don't like about taking US 30 trades during after hours is that we're in Asia session. So during Asia session, the price just moves really slow. So in order to get this huge move, a 1500 pip move, it's going to take a lot of volatility. And since there's not much volatility in the market right now, it might be a little difficult for you to come out of this trade successful. But not to say that it won't hit, because you can see right here, price actually shot up at some point. So if you were to put your stop loss, your stop loss, your TP1 halfway, it could actually be a pretty good trade, because once it reaches TP1, you can always move your stop loss to that point and guarantee those profits before getting out. So right here, if I set TP1 right there, I could set an alert on this, add an alert on the line. And then, I can put it once price crosses this line, and then I could put like US 30 TP1, move stop loss. So if I set that alert right there, once price reaches this point and crosses, I'll get an alert and it says to move my stop loss. So once I get that alert, I'll move my stop loss, and then I'll guarantee these profits right here. Pretty much eliminate risk right here. I'll guarantee profits moving forward. But that's just my take on it. If you guys want to take it, this is available for whoever wants to enter this trade. This looks like a nice scalp because let's see. Yeah, it looks like it could be a pretty good scalp, because I think overall, yeah, this whole day it's been an uptrend. So you look at the chart from here, it's been an uptrend since the 26th actually. So it's a pretty nice move up. So yeah, I mean, you guys can take this at your own risk. I'll share this in the group right now too. I'll share this in the premium. Let's see. Scalp entry. James. There we go. We got that right there. I'll share that in the other premium. So if you guys are in premium, you guys will get all of my trade ideas and everyone else's trade ideas too. So if you guys aren't in premium yet, you guys can see here, we share trade ideas throughout the entire day. So if you guys have any questions with trading, or if you guys want to connect with people that are actually serious about their trading, everyone's in this group right here. Aside from like everyone messing around, other than that, we do have trades here. Like we have these entries from US 30 this morning, which wasn't really shared. But I'll also share this in the free group too, just so everyone else can get in on that. But yeah, okay, so I've looked at those. I'm gonna scan the charts real quick just to confirm any 4-hour entries. Otherwise, I will go back to the questions, guys. So I have a couple here. Yeah, let's see. I'll answer one more question. For Hugo's, one person's asking for Hugo's, when would you move past 0.01? What size account in your opinion? So for Hugo's way, you would have to trade a 0.01 per $1,000. So once you reach $2,000, you can move it up to a 0.02. And then if you get up to $3,000, you can move that to a 0.03. I see a lot of people trying to flip the accounts for US 30, and they trade like a 0.05 on like $1,000 account, and then they end up blowing their account because they can't handle the risk. Obviously, if you're going for a 1,500 pip move, you have to have enough capital to eat the drawdown if it does go into drawdown. So if you're trading, a $1,000 account, then just stick with a 0.01 until you build that to 2,000, and then you can move up to a higher lot size. I mean, I know it sucks because you would anticipate making a whole lot more money if you're trading a higher lot size, but you're going to be able to survive to trade the next day, because you don't have no guarantee that that trade is going to hit full TP every single time without going into some sort of drawdown. Odd CHF's looking nice. So this is what we went over earlier. Still looks like a great trade if you guys are in it. RJQY, I was watching this earlier. What I'm waiting for this candle to close above this zone, and then I can take a buy to shoot it on upwards. But right now, there's not really there's no entry available. But if you look at the pivots, it's a nice entry right there. Actually, this might be a good.
I know NJ looks real nice.
Oh, I might take this trade because look, this is a pivot entry. Shot up, came down, rejected off this point, and then shot on up. We have a buy signal. So yeah, I might take this right here. Actually, I'll send this out.
Yeah, NJ looks nice as well.
What do you think of this, Aaron? This is a 60. It's about 60 pips. 61.
Not too bad. It's pretty cool. Not too much.
Yeah, it's not too much risk. So I'll call that right now. Or not right now, but once. But it's in the zone. You think it'll break out the zone?
It should, because I'm looking at the other JPY pairs. They look bullish as well, so it should be good.
All right, guys. So you got that from Aaron. Aaron gave me the go. So we're gonna call that soon.
You want a spot?
Let's see.
But NJ looks nice as well.
Yeah, he's not looking so great, but we're already out of this trade. So if you guys are out of this trade, you'd be good. Let's see. So that's good. CAD CHF. No, nothing there. KJPY. And oh yeah, we should call it KJPY. This looks nice too.
Yeah, they all look nice. All the JPY pairs look they look pretty bullish right now.
What do you think about that? 78 pips. Should we make that smaller?
You could if you want to, maybe like 65 or 60 pips.
Let's see. Yeah, 65 looks cool. So I'll keep that there. CHF JPY. I mean, it looks good, but it's like getting close to the zone. What do you think?
Yeah, that's a little bit too close to the zone. I wouldn't get into that one.
Yeah, so we'll call. We got 2 calls coming, guys. If you guys are in premium, you guys will get those trades shortly. If you guys are still in this Euro odd call, position, we had this from the freaking 15th. We had this for like 2 weeks, but it's coming back down. So if you guys are in this trade, or if you guys are still in the trade, it's actually looking really good. I wonder if Josh is in here. Where's Josh? Is he in here? No, he's not. Josh held the trade for like a whole month and then finally hit TP. One of our trades from a while back. Euro CAD, what do you think about this, Aaron?
For sale.
It looks too close to the zone.
It's way too close to the zone. I wouldn't. I mean, it can drop, but it's a little too risky right now. Too early to call.
Yeah, I agree. Your JPY, what do you think?
Yeah, that one. I mean, I think that the JPY pairs are bullish right now, but it's just too close to the zone. So it's like we can't really call no risky trade right now.
Yeah, not right now.
You know, the JPY pairs could be bullish right now, and Euro could be weak during London session. So you know,
yeah,
we get caught with the okie doke.
Man, yeah, especially during London session. So we got yen right here. This would be good if we had a sell signal.
Yeah, that would be nice.
So I'll take it off. It doesn't look like. I'll leave the marking up just in case. GA would be good too if we had a sell signal. I'm gonna keep watching that. GC.
Hold on 1 second.
GJ. Aaron, what do you think about GJ? This actually looks pretty good. It's got like a weak resistance right here.
I mean, if it breaks that zone, it'll be a nice buy, but it's too close. It's too close to the zone as well.
Yeah, for this one.
Yeah, if that zone wasn't right there, I would have bought.
Yeah, maybe it's at the 10 o'clock candle, so let's mark that for later.
Close to the London session.
Yeah, I should call this. I didn't even look at this, bro. Look, it came up, rejected off this area, and then came down with a sell signal. That'd be a nice. God damn. 160 pips, bro. That would be nice. See, I was
or a little bit of drawdown, but man, straight to profit.
Nice. Yeah, I think what I'm gonna do now is I'm gonna start when I look at the entries, I'm gonna use the pivot strategy too.
Exactly. Yeah, extra confirmation.
Yeah, Because look at this right here, man. Shot up, rejection came down. We had the sell right here. Actually, I think we took the sell for GU. I can't remember.
I think last week.
Last week, right? Yeah.
Yep.
What do you think about NCD CAD? I think this might be too close, huh? Yeah, it's only 15 pips.
Oh yeah, that's way too close.
And see, this would be good if it closed above. What do you think?
Yeah, I was looking at that one too. Well, I was looking at NZD JPY. That was a good one as well. But yeah, it's retracing them a little bit.
NZD JPY for a buy?
Yeah.
All right, let me check it real quick. It's not sell right now. But I think we hit TP1 already, so we should be good. Yeah. So we did hit TP1 on this last week, actually, right here on the 19th. So if you guys still have this trade active, I'd probably close it. Inside the zone, though, you think it's going to break out the zoner?
Yeah, I didn't even realize it was that close to the zone. Let's see, how many pips is that? Like 25 pips?
Yeah, around there, 25.
Yeah, actually, this might be a little bit too close as well.
Yeah, so I'll probably hold off that one. And you, let's see. There. UCAD. I was still thinking about calling this UCAD, but
Wait, that one looked real nice. That was real nice. I mean, it's not too late to call it if you think about it.
oh, what about UJ? I wish call
Wait,
UJ.
that one looks real nice. That's perfect.
On that right now.
So yeah, UJ looks nice, and if you want to call UCAD as well for late entry.
What do you think? Should I put 66, 76 pips? Yeah, fuck it, 76.
It's cool right there. Not too bad.
All right, cool. So I'll call this right now. So you guys are in premium. You guys are getting these calls right now.
All right, 1 second.
Yeah, go ahead, bro. All right, guys, I'm calling the entries for the premium group right now. So if you guys are in the premium group, you guys will get these calls. And this is for about 26 pips. My math sucks. About 238. So we got that buy stop right there. I'll come back to that later. Let me go here. AJ. Got JPY. It's pretty much all of the JPY pairs, looks like. Entry. That was 62. Oops. 62, 31. And then we got one more, guys, and then I'll be back to the questions. And guys, remember that these are buy stop orders, so you shouldn't be entering these right away. These shouldn't be market. Just to confirm, because I don't want you guys to get in these trades too early, because we want to catch that momentum swing upwards. Yeah, because price is below all of the entries for these, so none of these should be entered right away. Why? TP1, 2, 2. I think that's it. All right, guys. So give me 1 second. I'm gonna step away and get some water real quick. I'll be right back.
Yo, Shawn. That's just the way it is. Oh yeah, things will never be the same.
All right, guys. I'm back. Let's see. Let me get back to the questions real quick. So it's one question from Tim. He's asking if you say use 3%, that means I should only open 3 trades at 1%, correct? Yeah. So for every every active trade you have, you should only have a total of 3%. That doesn't mean 3% per entry. It's 3% total. Because if you go over that, you're going to be over leveraging your account. So if you have three trades with 3% each, that'll be 9% risk. You're going to be over leveraging way too much, and odds of you like blowing your account's going to be pretty high. So your risk should always be 3% max in total. Let's see what else we got here. We have Keith said NZD CAD for a sell. So let me go to NZD CAD real quick. Yeah, actually, that was one that we just looked at, actually. So NZD CAD does look like a good sell, but the only reason me and Aaron decided not to take it was because there's 2 zones right here, and they're pretty strong zones. You can see prices tested it quite a bit down here. So the problem with this is we don't want to enter this trade, and then it comes down, and then it rejects and goes the opposite direction. Also, because the overall trend is pretty strong upwards, so we just don't want to get caught in any random reversal. So let me see if there's anything else here. Let me copy these over to the premium chat real quick. Oh, whoops. I already copied them over.
That's just the way it is.
So it looks like we're good here. Yeah, let me go back to the call that we were just looking at. It looks good. That was a good call, James. So it's pushing up right now. I'm tempted to enter it, but technically I would enter it, but I gotta do it on my phone, so I don't really want to get sidetracked with a lot of other stuff because I'm on this webinar. This is why I don't like to trade live on the webinar, because I get kind of caught up with a lot of other things. But let's see what we got here. So we've answered that question. Let's see. Taylor's asking, I just joined K2. What broker can I use for WS30? So that symbol is specifically for FTMO. I'm not sure if you're trading on FTMO. You would need, that would be off the LMAX broker. So if you want to trade on LMAX, I do recommend it. It's just it's an expensive broker to trade on because it's an institutional broker. So let me just pull up LMAX. So if you want to trade on LMAX, this is the broker that we use for FTMO. They're an institutional broker, so you get like the best spreads for everything. The only problem is you need a very large account size. So if you go to FAQs, I think it's about a $10,000 minimum to open an account. So let's see. And that's why that symbol says, it's not IMAX, it's an L actually, it's a lowercase L. So it's WS30.LMAX_M, which is for the E-mini. But yeah, you can see here, the minimum deposit is 10,000. So if you don't have 10,000, you can't trade with this broker. And the commissions are kind of high. So if you have the money, then yeah, I would go with it 100% because it's a great broker. They have the best spreads, but if you can't afford it, then you might have to trade with a unregulated broker like Hugo's Way or something, which is not as reliable, obviously, because they're not an institutional broker like LMAX. But yeah, if you want to trade with WS30.LMAX, it would be this broker right here. You go to lmax.com and then you can sign up with them. But like I said, it's going to require a $10,000 minimum deposit. So just keep that in mind. I'm going to go over James' question right now. James asking to discuss adjusting entry based on spread. So pretty much, so say if our entry right here was, I'm just going to put it right here. Oops. I'm going to delete this stuff. Okay, so say our entry obviously right here is 25.76.5.2. And then the spread right here, you can see up here is 30, right? So spread is 30. So if you're going to enter this for a buy, you have to add this spread to your entry to cover the spread. So instead of, or wait, actually, let me see. I don't know if you subtract it. Actually, you subtract it. So if you're going to buy, so if you are buying, subtract spread from entry. If you are selling, add spread to entry. So right here, entry is 25.76, 25.765.2 plus spread, which is 30, equals your entry is going to be 25.795.2. And the reason for that, oh no, sorry, we're supposed to subtract it. So it's 3.5. So the reason for that is that, so you get in at the specific price, because the thing is, if you enter here and you try to enter at the specific price, it's gonna knock you into the trade early. So say, but you can see here that the spread is variable, it keeps changing. So you want to give yourself some cushion. So instead of 30, you'd probably make that 30 and 60, somewhere around there, probably use 60. So in that situation, once price reaches this specific area, you'll get entered into the trade because you're including the spread into your trade. The thing is, if you don't say if you don't add that to it, you're gonna get in at this. So you're still gonna get at the same price, but your entry is gonna be way up here. So you're gonna come in at a loss. That's how a lot of people get sucked into these trades because obviously right here I have a tight spread, but if you're trading with actually this spread's kind of wide. It would depend on your broker. So if you're on LMAX, let me go to LMAX real quick again. If you go to LMAX, the spread for US 30 is so the spread right here for like UJ is like 0.5. And then if I go to UJ over here, if I go to UJ here, the spread is 2 pips. So the thing is, if you're entering a buy, you're going to enter with 2 pips on top, but you're going to get pulled into the trade too early compared to if you were entering with a different broker. And that's kind of how brokers kind of trap you. Like if you're trading with an unregulated broker like Hugo's Way, I know a lot of people will get confused why they're inside a trade and price hasn't reached that price point yet. That's because you haven't factored in the spread. Basically what they're doing is they're sucking you into that trade and then you enter the trade at a loss, including the spread. In order to avoid that, you have to add the spread to your trade. So the thing is, say if you want to enter sell right here for 107.259, but the spread is 2 pips, say 2 pips. If you entered right here at 107.97, you would enter that with a loss. But the thing is, if you entered with like lower, if you subtract the 2 pips, let's see if I can right here. It's kind of hard to explain unless there's like some sort of visualization. So let's see, 107.95. And then I'll make this small just so you guys can see. I don't know if there's a better video for this, but okay, so pretty much if you're trying to enter this trade at 107.95, but the spread's about 2 pips, you would have to just subtract that by 2. So you would, instead of putting 97.5, you would put 107.95, you would put 107.93. So in that situation, see, it's a huge difference where you get in from, because you want to get in with spread. You'll get in with the same 2 pip loss, but you'll get in at the correct price point. Because the thing is, if you enter at the bid ask price, they'll suck you in within the spread. And that's why a lot of people got sucked into, let's see, the other trade yesterday was, I can't remember. Aaron, are you here? I'm trying to figure out what the trade was yesterday.
Yeah, bro, I'm here.
So, Aaron, do you remember what that trade was yesterday that a lot of people got stuck in?
Was it the CAD JPY?
No, it wasn't CAD JPY.
Triggered X. Wait, which one?
Was it CAD JPY? It might have been.
I think it was CAD JPY. And I guess the spread was like 5 pips away from entry and it's still triggered for some people.
Yeah, so the spread here is pretty high. It's like 4 pips. For the smaller pairs like UJ, you don't have to worry about those very much because the spread is like, I mean, right now it's kind of heavy. It's 2 pips. But if it's like lower, like around like less than 2 pips or less than 1 pip, it wouldn't really matter because you'll get pulled into that trade regardless. But if you're trading something like NZD-CHF or where it's like a 5 pip spread, this is where it becomes an issue, because the thing is you'll get sucked into this trade 5 pips early and you'll still have that 5 pip loss because you have to pay for the spread. And that's why you have to factor it into the trade so that you'll get in at the correct price point, but with the same loss. Is James still here? I don't know if James gets that. I kind of want to make sure that he understands this before I move on to something else. Let's see. James, are you here? If you're here, okay, perfect. Yes, James got it. So yeah, if anyone else has a confusion with that, there's a lot of people that are confused with that specific situation with the spread. Basically, if you're entering a sell, you just want to subtract the spread from your entry so you don't get in too early. Like a lot of people got sucked into the trade yesterday. Fortunately, I didn't, and like half the other people didn't because they factored in the spread. But yeah, like I mentioned, so the spread here is like 5 pips. I'm trying to find something else that has like an extremely high spread. Like GN. See, GN has an 8 pip spread. For sure on this, you have to factor it in because you're going to get in it at a 9 pip loss. And then you're going to get sucked into the trade too early. That's why you see these spikes here sometimes. Sometimes what people do is they have like an order here, like a sell stop or something. And then, so I'll just mark this right here. Like say you have a sell stop like right here, right? And you have a 9 pip spread. You're going to get entered right here, actually, way up here. So even though your entry is right here, you're going to get entered as prices right here. So the thing is with unregulated brokers, they trap you. So when you go in right here, they trap you into this trade because they fill your order. Since you have the spread, they add the spread to it if you have a sell stop, and then you get sucked into this trade, and then you end up with a loss. Yeah, that's correct. Yeah, James said subtract if it's a sell and add if it's a buy. Yeah, that's right. So right here, say you wanted to get in at this price point, right? You'd have to subtract this by 8 pips. So instead of getting in right here, you'd have to put your entry like way down here. So if I measure this from this point up to here, that's still too close. Let me move down a little further. So if your price was right here, you wouldn't have getting triggered. You would have gotten very close to getting triggered because, so let's move this to like 9 pips. There we go. So you've gotten really close to getting triggered, but you wouldn't because the sell price. So you can see right here, the sell price and the buy price are split by the spread. So 1.9170 is going to be 8 pips away from 1.9178. And that's why you subtract it so you could get in at the exact price point. The problem with this is if you had a sell right here, see, you wouldn't have gone filled because even if it was 9 pips, it still wouldn't have triggered your order. The problem is if you're within this zone, so if I move this up a little bit, even though price is way up here, but you're within the 9 pips. So if you look here on the chart, this is 9 pips away, but price actually got to those 9 pips, you'd get screwed because your order would get filled even though price never got down here. So I think this is a big thing that a lot of people don't realize, that spread takes its effect when you're entering a trade. So yeah, this is one example of a sell. You subtract 9 from from your actual entry to accommodate for the spread. In the other direction right here for a buy, see, I'm gonna mark this right here. So right here, you don't want your entry to be at least 9 pips away from there. So entry to be right here. This way, if price was to come up, you wouldn't get filled. See, because price never reached this area. The thing is, that's how you factor in the spread, because the thing is, if your spread was less, say it's moved down to this area, and the spread was 9 pips, even though your entry was, so even though your entry is way up here, you have to add, so say your entry is right here, you add these 9 pips to your bid ask price. So you would have gotten, even though your entry was up here, you still would have gone filled because price touched your entry point down here because they add spread to it. So that's why if you're trading something with a wide spread, you have to be cognizant as to where the spread is at that time. And you don't have to go exactly from what the spread shows. I would go a little bit higher. So instead of 9 pips, I'd go like 12 pips because obviously it's going to be variable. It's going to be moving throughout the day depending on how high liquidity is in the market at that time. But yeah, I think that was it for that question. I don't know if you guys have any other questions. Otherwise, I will continue to go over the other strategy, the K2 pivot strategy. Actually, I'm gonna go back to US 30, see how that's playing out. Looks like it's flopped a little bit. this looks like it should still be good. It came down, so it came. So pretty much like I mentioned earlier, you identify a strong trend upwards. It pulls down, rejects off this point. So we have the retracement and rejection of the K2 pivot right here, followed by a valid K2 momentum signal. So right here we have the momentum signal. It's still trending up. It's just retracing a little bit. Looks like it's testing level 2 again before it could possibly shoot on up. So I think this is fine right now. It's got to give it some more time. Let's see what other entries we got here. So this is the entry from earlier, KJPY. What else do we have? Yeah, so I don't think anything is filled yet. Let's see. Let me check the chat real quick to see if anyone's in anything. No, doesn't look like it. Let's see. Yeah, I think that's about it for right now. So let me go back to the. A lot of people were asking me to go over the strategy. So let me just. Actually, I'm gonna go on this chart so I don't mess with this one. All right, cool. So I'll go over it with the 4-hour first. I'll move my way down. I don't know if you guys want to see scalping or if you guys want to see swing trading or intraday trading. It's really up to you guys. If you guys have any other questions, feel free to put them in the Q&A. We don't have anything right now, so I'm just going to go over the K2 pivot strategy because that's what majority of people were asking for this week to go over during the webinar. So we still have about 30 minutes left in this webinar, so I'm going to keep going over these questions. Yeah, but otherwise, if you guys have any other specific questions, feel free to let me know, and then we can go over that. Yeah, okay, so let's keep going. So let me hide this right here. Okay, so this is going to be. So I'll just rewind this to an area over here. So we'll rewind this to something like this point. All right. So right here, we're going to go over the requirements. So even though this is scalp strategy, this is the same exact strategy for all time frames. So I'm just going to leave this up. I'm not going to change it, or I'll just change this to K2 pivot strategy so that you guys can see it works pretty much on all time frames. So you don't have to really change much. It's just just the time frame that you're trading on. Okay, so first we want to identify a strong trend. In order to identify a strong trend, we're going to look at the K2 pivots, and we want to make sure that pivots are angling in the same direction, and they're pretty spread out like they are right here. So you can see we have level 1, level 2, level 3, and level 4. So now we've identified a strong trend. Next, you want to identify a retracement and rejection of the K2 pivot. Right here, you can see price came down, came up, came back down right here. There was 2 retracements here. So technically, this could have been another entry, but we're looking at this right here because we're already far down the line. But okay, so we've identified the strong trend upwards. We've identified the retracement and rejection right here because price came up, came down, came up, retraced again right here, and then rejected off the zone right here. So this is a strong rejection. So this gives very good confirmation that price is probably going to continue on upwards. Lastly, you want to identify a valid K2 momentum signal. Right here is a valid buy signal because it's a buy signal with a green bullish candle. And since all these 3 requirements have been met, we can enter on the open of the following candle. So we'll enter right over here. And then I'll put my stop loss at the previous swing, which is right here. And then I'll just round that to 3,600. Let's see. Taylor's asking, can you go over using alert to take a trade? Yeah, sure, Taylor. I'll go over that after I finish this one right now. So in a few minutes, I'll finish this and then I'll go over that right now. All right, cool. So right here, we have a valid entry. We let it run through. You can see right there, it hit full profit target. So there goes one win right there on the 4-hour. Let me go to if we could find another one here. So I'm looking for Okay, so right here, again, we identified a strong trend because you can see right here the pivots are pretty spread out. So they're all angling up and they're spread out. So this shows a very strong uptrend. We've identified that. Next, we want to identify a retracement and rejection off a K2 pivot zone. So right here, you can see price was going up and then it retraced down this way. And then it rejected off this level 3. So now we have the first two requirements met. Next, we just want to identify a valid K2 momentum signal. So since we're looking for a buy, we're going to be looking for a valid buy signal like we did right here. Let's keep moving forward. All right, right here. Same exact situation. So right here, we identified a strong trend upwards. We identified a retracement and rejection off the K2 pivot right here. So price came up, retraced, rejected right here, and then went sideways until we got a valid buy signal right here, indicating that momentum was going to continue upwards. So let's put a, once those requirements are met, we can enter on the open of the following candle in our long position right here. We'll place our stop loss at the previous swing, which would be this candle right here. And then I'll just copy that over to the TP and then let's let it run, see what happens. There you go, guys. Prop target again. So 2 back-to-back wins right there for 5,565 pips. Our previous one was 3,600 pips. So if we add that up, was this 55.65? So 55.65 plus 3,600. If you're trading with Hugo's way with, let's say, so Hugo's way with the 0.01, the smallest lot size, right, guys? Multiply that by 10 cents per pip. You would have made $916.50 with these two trades right here. Easy as that, guys. But yeah, okay, so let me, Taylor's asking if I can go over using an alert to take a K2 trade. So let me go to the premium real quick. So right here, I sent, so it's going to depend on your broker. I don't know what you're trading on. If you're trading on TradingView or MT4, it's just going to vary because I can't show you the MT4 setup on my computer because I don't have it set up. You'd probably reach out to someone else in the K2 Premium. You could just ask them, and you know someone can show you because other people use MT4 while I use Exness. I never heard of Exness. I don't know what is that a broker or is that a platform? Here, let me Google it. I've never heard of Exness before. Okay, cool. So Exness is your broker, but which platform do you trade on? Do you trade on MT4? Let's see. Oh, that's weird. Looks like Exness is a scam site. Let's see. I've never heard of Exness. Oh. Okay, but yeah, you said you trade on MT4. So I can't show you exactly how to take it on MT4, but I'll just show you the logistics of it. So basically, you have an entry like this right here. Let me see. Where did I put that trade at? Or actually, I'll just go over like one of the official ones that I sent out. Okay, so right here for UJ, what you'll do is you'll put your entry into your. I'm trying to figure out how can I show you. Wait, Taylor. So have you ever entered a trade on MT4? I just want to make sure so I can if I can explain to you what to do, you probably understand what I'm saying. I just want to make sure that you actually know the process of putting in a trade. Okay, perfect. So you're already familiar with it. So pretty much what you're going to do is you're going to enter, right here I have a buy stop entry, right? So you're going to open your MT4, you're going to open a UJ position, and then you're going to enter a buy stop position. And then for the entry, you're going to put 108.093. Depending on your broker, I don't think the spread for UJ is that wide. So you don't really have to factor in your spread. I would recommend you do factor in your spread, but depending on how wide your spread is, you can probably just enter at this point if it's like less than a pip or less than 2 pips. And then for your profit target, you're going to put target 2 right here. And then for your stop loss, obviously you're going to put 107.333. So if I pull up UJ, it hasn't filled yet, but it's a buy stop order. So once it does fill, let me just get this point right here. So I'm not sure if you have an automatic, like some type of EA that allows you to automatically adjust the stop loss. But if you don't, you'll just have to do it manually, like I do pretty much, because I don't trade on MT4 very much, just for US 30. So what you're gonna do is you're gonna set your stop loss to 76 pips, and your profit target to 76 pips. You know, those specific numbers that were provided right there. And what you're gonna do is once price reaches TP1, you're gonna move your stop loss to this point right here. So once price reaches, let me see this right here. So once price reaches TP1, which is around this area, you're gonna move your stop loss. You're gonna change your stop loss to TP1 to 108.473. That way when price reaches this area, if it comes down, you've already guaranteed this profit up here. Like you're no longer at risk. Everything is going to be profit from here because you've locked in this profit down here, but you're also aiming to reach full profit. And that's pretty much how you would enter that. You understand what I meant by that, Taylor? I just want to make sure you get it before I move on. Let's see. All right, perfect. All right, cool. Let's see. We have one question from Craig. Craig is asking, how do you determine lot size when trading US 30? Stinu only does pairs. So for US 30, you should probably just follow the 0.01 to $1,000. Oh, but you're asking, okay, for FTMO. So for FTMO, this is the breakdown of how pips are valued. So I'm gonna go back to US 30. All right, so on FTMO, a 0.01 will equal $1 per pip. So the thing is, if you're going for, let me try to figure out how to, so this would be equal to a 0.01. So if you wanted to, I'm gonna see if there's a, it's kind of hard to explain US 30 if you're not, I'm gonna try to figure this out. I don't think because if Stinu doesn't have US 30, then you kind of have to do it in your head to determine how much you're risking. Because so this is an example. So pretty much if you're doing 10.00, it's going to be $1 per pip. So if the stop loss is 1,500, which is, you know, the normal stop loss for us when we're trading US 30, that's going to equal a 1,500 pip risk. I mean, $1,500 risk. And the thing is, Craig, so the thing is, they only allow you to risk 5% when you're trading a 5% total if you're trading on FTMO. So it's kind of weird because you can't really trade proper risk management. I mean, you could trade proper risk management, but you literally have to trade less than 1%. So the whole 3% rule is not going to work for FTMO because if you're trading, so let's see, you have a $5,000 account, $50,000 account times 0.3. Yeah, so 3% is going to be 1,500. So pretty much, if you're going to be trading 3% risk, you're going to be trading a 10.0, a 10 lot size on FTMO, if it's a 1500 pip stop loss. The thing is, if it's so say if it's 200, I mean 2000 pip stop loss. I mean, this is where it gets a little complicated. You kind of have to know what you're doing because actually, let me go check baby pips real quick because I don't know which calculator actually has US 30. Yeah, because baby pips doesn't even carry it either. I mean, you kind of have to know what you're doing when you're trading US 30. So let me just go to, this would probably help you out. Okay, so you could go to, you'll just change your balance to 50,000. So what I'm doing here is I'm using a paper trading account on TradingView to determine the risk. This is probably gonna be your best option because I don't think there's anything else that you can use. So if you open US 30 on your chart, you just open paper trading right here. You have to do this on the computer because you don't have this option on the phone app. So you'll just go to paper trading. You'll change your account to the same account size you're using on FCMO, which is 50,000. So we have 50,000 equity right there, right? You know, if your account's smaller, you can always change that. You just click on reset paper trading account and say you're at 52,000. You know, you change that to 52,000. But just for demonstrational purposes, I'll do 50,000. And pretty much right here, if you're going to enter US 30, you just enter like a self position, and then you'll enter at that price. You'll have take profit at 1,500. 1,500, and then you'll change your risk to 3%. And then it'll tell you your lot size right here, 10 lots. Craig, do you understand what I'm saying? I just want to make sure so before I, you know, I don't want you to be confused with this before I keep going forward. Because it's going to be different depending on your risk. Okay, perfect. Yeah. So if you're risking 1,500 pips, you can put that in there. And then if you're risking 2,000 pips, you can change this to 2,000, and then it'll tell you 7 lots. So that this makes things easy for you to determine what's 3%, where you're only going to be risking 1,400 because you don't want to risk too much because depending on your max loss, I think our max loss on FTMO is like 2,500 a day or 5,000 for the month. So you definitely want to use between 1% and 3%. But yeah, pretty much you just change the numbers here. 2,500, say if your stop loss 2,500, 6 lots. You know, the lots aren't going to be exact because they're going to be full lot sizes. You know, there's no half lots or whatever like that. So pretty much you could just change the numbers here, and then it'll automatically tell you what lot size to use. Craig said perfect, no calculators out there. Yeah, I think this is going to be your best option. You know, no one's ever asked me this question, so I'm glad you asked so that I can have an explanation for people when they want to know. But yeah, this is probably going to be your best option. If you can get to a computer, because I don't think you could do this on your phone. Let's see, you have another question. Is there an EA that will allow me to enter trades faster with stop loss? Honestly, I don't know. I don't really use MT4 very much. I just use it for, you know, that daily US 30 trade. And I just do it by hand. I don't even use any EAs or anything because I can't run MT4 on my Mac, unfortunately. But if you have, you could probably ask in the chat. I'm sure someone has something. I just personally don't have one that you can use for that. But yeah, let me see what else we got here. I think that's about, yeah, no problem, Craig. So I think that's about it for questions for right now. If you guys have any other questions, feel free to put them in the Q&A, and then we can go over them. Otherwise, I'll probably just go over a few more examples for the K2 pivot strategy. I know that's what most people want to see right now since it's a new strategy. But like I said, I finished the video, so we could actually go over those a little later. I mean, I'll have it uploaded so you guys can go over it on your own, and it's going to be pretty simple. But yeah, this was the entry on the 4-hour chart. So you can see right there, you know, perfect entries right there. You know, we'll go down to the, let's see, to the 30-minute if you guys want to see, you know, intraday moves. 30-minute or 1 hour. It's really up to you guys. Taylor said upload, right? Yeah, Taylor, it's gonna be on the K2 platform where it has the whole course. So it should be up there in about, if not tonight, it'll be up there by tomorrow because I still need to edit them. But they're pretty much, they're all recorded and ready to go. So once I have them edited and I have them ready to upload, they'll be good to go. James asking, what's the difference between MT4 and MT5? I don't think there's really much difference. MT4 is just the older platform. They let you do a lot of more customized things. Like a lot of people make custom indicators and strategies that can run, automated strategies on MT4. I don't think you can run automated strategies like bots on MT5 yet. I think MT5 has a lot more options because it's brand new, but they're more so on the side of new indicators and just visualization things. On MT4, I think a lot of people use that specifically for automation. I personally want to use it for automation because you'll never know and it'll screw up on you, and then there goes your trades. But I think that's the main difference. I think the main difference between MT4 is that they have a lot of the older tools where you can do automated strategies, while for MT5 it has a lot of newer tools that that actually work a lot better because it's a new platform and it has new data and stuff like that. But yeah, unfortunately, I can't really use MT4, so I'm stuck with TradingView, which is it's been working pretty fine for me so far. Let's see. Yeah, if anyone has any input with regard to MT4 and MT5, go ahead and say something because I personally have no experience with MT4 and MT5, so I can't really say, but I think those are the main differences. But yeah, let's keep going over the strategy. So this is going to be the intraday strategy for the pivots. So let me just go right here to this entry. So same exact requirements. You want to identify a strong trend. So right here, obviously you can see it's in a strong trend upwards. It has the K2 pivots pretty spread out. We have level 1, 2, 3, and 4, and they're pretty spread out, pushing on up. You can see price has been trending up pretty nicely. So the next requirement is we're going to identify a retracement and rejection off the K2 pivot zones. So you can see right here, price shot up, retraced right here, and then rejected off the zones right here. So after this rejection, you want to identify a valid K2 momentum signal. So right here, we have a valid buy signal. And it's valid because we have a buy signal with a green bullish candle. The opposite of a valid candle would be this one right here. We have a sell signal with a green bullish candle. So if they don't match, then that'd make it invalid. These match, so it's valid. So now that we have the first 3 requirements met, we've identified a strong trend. We've identified a retracement and rejection off the K2 pivot zone. Lastly, we want to identify a valid K2 momentum signal, which we did right here. So once those requirements are met, we can enter on the open of the following candle. So let's enter a long position right here. And then we're going to put our stop loss at the previous swing. Should be like right there. So 1870 is going to be our range. And if we let that run, there you go, full profit, guys. Same situation as earlier. And then there's actually another entry right here. So you can see right here, this is full profit. Again, right here, I'll just back up. And this is what I mean about trading on the lower time frames. You have more entries because you can catch more retracements into the K2 pivot zones. So right here, same situation, identified strong trend up. We've already identified that. We will want to identify a retracement and rejection off the K2 pivot. You can see right here, price shot up, retraced right here, and the rejection on level 2 right here. Perfect rejection with that nice wick. Lastly, you want to identify a valid K2 momentum signal. Right here, we have a valid buy signal. Same situation as earlier. We enter a long position right here. Put my stop loss at the previous swing, which is right here. It's 1857. And then we let it run. And so right here in this situation, this is where you'd have to move your stop loss. So 1857's right there. I'll put half of that. 1857 divided by 2, which would be, roughly 1928. So 1928 right there. So as you can see, you had an ample opportunity to exit this trade. So we'll put our stop loss right there. So here's the full move again, just so you guys can see. This situation right here, as price shot up, once you reach the TP1 right here, we move our stop loss to this area right here. And this is why I always emphasize, proper risk management and moving your stop loss. Because the thing is, if you didn't move your stop loss here and you got greedy, you ended up wanting to take the full move, you'd have gone and stopped out down here. But the thing is, if you move your stop loss to TP1 up here, you would have gone out with profit for half profit of, what was it? It was 928 pips, which is not bad because if you're trading, even if you're trading with Hugo's way, if you're trading with Hugo's way with the smallest lot size, you multiply this by, so we'll just change this to 928. 928 pips times 10 cents, you'd still make $92.80. If you were trading with a bigger broker that values it a little higher, you do 928 times $1 per pip, you make $928 off this one trade. So, it's really give or take. If you use proper risk management, you would have locked in a win right here. So I don't know if you'd rather lock in half win or full loss, because, obviously I'd want half win and no losses, because if you do that, you can still continue to grow your account, because you have a full win right here for 1,800, 1,870 pips plus 928 pips there. So let's see, 1870 plus 928. You could have had $2,798 with these two trades right here if you didn't get greedy. If you got greedy, you would have had a loss here, and then you would have wiped out all your profits here with a small win. And this is why I always emphasize, proper risk management, because if you exercise proper risk management, see, like thinking earlier with, I forgot who it was. Oh, like Najir earlier, he was saying that he can't take half profit because he'll be in a loss. No, if you don't take half profit, you'll be in a full loss, because right here you could have a full win and half loss right here. But instead, he wanted to reach, full profit. If you reach full profit, you would have wiped out all your profits from this trade because you got greedy. And that's just a smart way of trading. I mean, if you want to be a full-time trader someday, you're going to have to learn proper risk management, because you can't bet the farm on every single trade, if that makes sense to you guys. But yeah, that's a basic entry right there. And I think that's about it. I don't have any other questions. I'll go over one more example. So, okay, so we did swing trading. We did intraday trading, 2 entries right here, okay? Next, we'll go to, let's do scalping on the 10-minute. So I go to 10-minute, and then we'll just go somewhere over here where I don't know, there are any entries over here. So let's go from wherever the trend was heavy and nice. So the trend was heavy and nice. It started from way down here. So as price broke up, came down, broke up again right here. I guess we can do it from somewhere over here. Okay, so same requirements. Identify a strong trend. You can see right here, the pivots are angling up, and then they're pretty spread among each other. So right here we have level 1, level 2, level 3, and level 4. Next, you want to identify a retracement and rejection off the K2 pivot zone. So as you can see right here, price shot up, retraced right here, rejected off the level 4. And then after those 2 requirements are met, you want to identify a valid K2 momentum signal. Right here, we have a valid buy signal. You can enter, and then so since all those 3 requirements have been met, you can enter on the open of the following candle. So in this situation, we'll enter along right over there. Hit your stop loss at the previous swing. Like I mentioned earlier, these are kind of tight. So I'd probably put it, well, depending on what time this trade was. So this trade was during Asia session, so it's kind of late. So I would probably just put it a little bit below the swing. So I'd probably put it about 800 pips. Because you guys have to be cognizant of, you know, how the market's moving at a specific time. If you're trading during New York session, like right here, you can see a lot of volatility. Price is moving really fast. But right here, you can see prices moving a little slower during Asia session. But if you look at this run, you can see right there, it ended up hitting full profit at some point. But if you move your stop loss to TP1 right here, you still would have gone stopped out at 400 pips. You know, I'll take 400 pips over 800 pip loss. So there goes one entry. And then I'll rewind this over here. Same situation right here. So I'll just delete this. Again, we identified a strong trend upwards. You can see that the pivots are angling up. If I zoom in a little bit, you can see that they're pretty spread out right here. So we have level 1, 2, 3, and 4. So we've identified a strong trend upwards. Next, we identify a retracement and rejection of the K2 pivot. So right here, price came down, came up, and then came down again right here. This is the retracement and the rejection off level 3. Once those two requirements are met, we want to identify a valid K2 momentum signal. Right here, we have a valid buy signal. So in this situation, we have all 3 requirements met, and then we can enter on the open of the following candle. So same situation again, enter a long position right here. Put the stop loss at the previous swing. I wouldn't put it up here. This is way too close, 500 pips. If you guys are familiar with US 30, this is literally barely covering the spread. So I wouldn't put it right there. I put it at the swing right here, so that you can cover, you know, enough space. So we'll just round that up to 950. And obviously, if you let it play out, it ended up hitting profit target. And then again, right here, there's another entry. So that's 1 entry, 2 entry, 3 entry right here. So you would have had 3 back-to-back wins for about 3,000 pips right there. You know, how easy can it get, guys? Literally, there's an entry right there. There's an entry right there that we just did. So you have racked up close to 3,000 pips in, how long is this? In about 7 hours, you know? Who wouldn't want to make $3,000 in 7 hours? Like, it's a no-brainer. We keep going again right here, another entry. And this is a valid entry because price is trending up. And then we identified a retracement right here. And then there was kind of a rejection, but it wasn't a very strong rejection. So this might be a bad trade actually, because I mean, we did see a rejection here. It came up, came down, and then came up again. But the rejection doesn't look very strong. If it was from right here and this was valid, that'd be a nice entry. But this was an invalid signal, so we wouldn't have taken that. Well, let's see what happens. So yeah, right here, you would probably have gone out at TP1. So TP1 would have been somewhere halfway, right here. So you would remove your stop loss as price moved up to this area. But it looks like it hit full TP anyways. So regardless as to whether you would have hit it or not, it still would have hit full TP right there. So there's another win. Another win right there. I mean, it's too easy, guys. I mean, I don't know how much easier this can get. But yeah, I think that's about it. I don't have any other questions. It's about to be 7. We've been on this call for about 2 hours and 20 minutes. So if you guys have any other questions, feel free to reach out to me, or, you know, pop a message in the chat and someone else can help you. Otherwise, I'll be available. But yeah, guys, it was a good live trading room. This will be uploaded shortly, and then I'm going to be working on the course videos for the next couple hours. Hopefully I'll get on the course by tonight. If not, it'll be up by tomorrow at latest. But yeah, guys, thanks for showing up. Again, if you guys are new here, I have this every week, twice a week actually, on Tuesdays and Thursdays at 5 p.m. Pacific Daylight Savings Time. So if you guys want to catch me again next Thursday, have your questions ready, and we'll be back on here. Otherwise, guys, I'll talk to you guys later. Thanks.